Understand about the strategy. So what is a strategy? Why we are initiating a strategy? What is the benefit of taking a strategy? So first I'll tell you what is a strategy. So what is a strategy? Here in what we have to take a combination of futures and options to minimize our loss risk. So we will form a combination of futures and option with respect to buy and sell, whatever may be. So this must taken with an approach that our risk or our loss must be protected. So that terminology or that method of trading is known as the strategy. So why we used to take the strategy? Because if you protect your losses, what happens? Your profits will be optimized in the long run. So that is the second best benefit of the strategy. If you do not protect, what happens? The money or the principal capital used to get eroded very quickly and you will not be left with any money for trading. So protection is highly essential for any kind of successful trader. So for that reason only lot of instruments are there, lot of terminologies are there, lot of methods are there, so by means of which you can able to protect your money. So that is the benefit of strategy, that is the way of taking the strategy. Now come to certain basic concept on the strategy formation. So these are the things we highly required for what is the rule for forming any option strategy or taking a option intraday trade. How you can find out a bull trend, bear trend and range bound trend. This is also highly important for you. So third is how you will know that because today you are initiating the strategy. Tomorrow what will happen you do not know. But everybody knows if the volatility of the instruments used to go up, all the net debit strategies means if the volatility goes up, all net debit strategies means if you are buying a call option and buying a put option, this is called a net debit strategy. If volatility goes up, then this strategy will benefit you. Whenever the volatility will fall, these strategies will give you losses. So for this thing, you require two informations. One, how to identify the volatility rise and fall. Second, how you can identify a bull trend or bear trend or a range bound trend. Simple mathematical processes are there. So if you can follow, this is not a very strict rule. Simple mathematical processes are there. If you follow that, you can able to identify which kind of market you are now, what kind of volatility scenario you are going to experience. So for first rule for identifying this volatility rise and fall, if the IV of the nearest in the money call option is higher than the nearest put option, then the volatility will fall in near terms with the trend is maintaining up and vice versa. So this is the first rule from IV and volatility comparing together you can able to find out. Second is saying that you take the absolute return for, you can take the high minus low divided by high at a particular time and divide by means high into 100. If this is greater than the daily volatility, then the near term volatility will rise and vice versa. Means if it is lesser, then volatility will fall. If this is greater, volatility will rise. If the closing or current price is in the 0.236, not 272, 0.236 Fibonacci ratio, 0.236% of Fibonacci retracement, below the midpoint, then the future trend will be downward or vice versa. So this is also another clause to know the trend also. So this is also another clause to know the trend. So volatility related two things I have told you. IV, with respect to IV, and volatility. So let us see. So first we will see that part. So let me go for the NSE site, NSE India. We will form fantastic strategies for this month to take some benefit out of that. So I am going for Nifty because Nifty is having a great liquidity also. So Nifty, I am just going to show you. Now it is at the 6,300 level. Option chain we are just going for. So option chain we are just focusing on. So here 6,300 you are now. So what is the nearest call and put? Definitely 6,300 call option and 6,300 put option. So what is the IV? You need not have to calculate this thing also because NSE is giving ready-made IV. IV is presented here, implied volatility. So implied volatility comes here. So IV of call and put you are getting here. So this IV of call and put just adjacent to their changes. So 6,300 I will be focusing on. IV is 22 and IV is 22.71. However, this is also 22.97, 6,300. So 22.71 and 22.97. So let me put it in this order. So currently we are at 6,300. 6,300, nearest call and put option is 6,003. So call option is having 22.97 and put option also is having 22.71, 22.97 and 22.71. So this is for the put option. And what is the volatility currently in the Nifty? So that also you have to see. Other information you can click on. So it is having analyzed 22.06. So Nifty is having, future is having 22.06. 06. So 22.06. This is the thing we have now. Fine. So now, what is the rule I have told? If the IV of the nearest in the money call option is higher than the nearest put option, then the volatility will fall in near term with the trend maintaining up. So what you are expecting from here? Can anyone will tell? IV of call option, IV of put option, nearest same strike because we are at 6,300 now, 303, 304. So what we are expecting now? This is the rule. 22.97, 22.71, 22.97 for call, 22.71 for the put for the IV. Tell me your answer. This is the nearest call option and put option. What is the volatility going to happen in the near future? Volatility will fall, maintaining the trend up. So in going future, volatility is going to fall, maintaining the trend up. So market can go up, however, the volatility will fall. So most of your answers are correct. Many of you have answered this correctly. So volatility will fall, however, the trend will go up. So we got all these clues. So now let us form some strategies which can give us good benefit in this. So in this particular scenario, fall in volatility, with price rise. What is the strategy? Number one, we can form a covered call with put. Number one, we can form multiple bull spread with future short multiple keeping delta near 0, we can also form, volatility is going to fall, we can also form theta 0 strategy. So you can also form theta 0 strategy, or also we can form negative Vega strategy. All these things you can, anyone you can form. So this is you are saying in the live market, Sunil Nayak. So you are one of my ex participant in the session. So most probably situation. For this particular situation, these strategies need to be taken. So for that you need to learn, because if you do not know what is Vega, what is theta, what is, then you cannot able to make some of the basic strategies. So these two, number 3 and number 4, it is for the advanced traders, those who know what is theta, how to make it 0, what is Vega, how to make it 0. However, these two strategies anyone can set. So I will be forming such a strategy with the help of our option strategy software. So our option strategy software has lot of, because most of you will be knowing that my first book on futures and option was Master's Key to Futures and Option. In this book, which is authored by me, wherein I have given basic strategy to advanced strategy, and in fact 22 option trading strategies is being given in this, which is for the Indian market. So for Indian market it is being given. So very basic concept also I have taken there. So all these 22 strategies are being programmed here in this thing. Apart from that, we have a user defined strategy wherein I will be just taking some of the strategies now. You to experience those strategies. So Nifty future is at 6296 now. I am going to form a covered call. Why covered call? Because trend will, prices will go up and volatility will fall. So this is what I am getting, this info I am getting. For that reason only, I am going to form a covered call strategy in Nifty. In Nifty, I am going to form this covered call strategy. So for that, I have just chosen the Nifty. I am just loading the data associated with the Nifty. Data associated with the Nifty. So once the data will be loaded, so I'll be buying one lot, preferably one call option of 6,300. Nearest, I'll be selling it one lot. So by this process of selling a call option and buying a future at 134, 6296 is the level I have just bought the future, sold 134. So less it by 134. So this is a simple strategy. So 64 as 2, 9 3s are 6, and 2 1 as 1. So 6162 level I have reduced. So I can think of in this term, I can buy a put option for further protection. If it falls down, then I can 6150, one put options, buy one put option, nearest put option. So here my profit is limited, loss also limited. So say election result is coming to Monday. So say 3 more days, because I need the volatility to fall. I will make some money. So for 3 days, I'll be just calculating this one. So 3 days perspective, if the Nifty goes to 6,500 level, here the projections I will tell little bit you have to vary, because it is based on the current volatility scenario it has taken. So how much maximum profit I can earn, how much liability I can have. So my maximum profitability will be 134, 134, minus 81, if this 81 is becoming a total 0 also, plus 4 points from here. So maximum profit will be in this strategy 2850. And if it is falling down vigorously and going till expiry, if I am just holding also, so my maximum liability in this will be, so till 62 I am protected, so 12 plus 81, my liability will be 4650. 4650 is the liability at this point of time. Profitability will be 2850 at this particular condition, this particular strategy. So it doesn't seem to be economical because my risk and reward is not properly balanced. So now next thing is, I can think in this term. I'll be forming a multiple, say I'll sell this one, and I'll be forming multiple bull spreads. So 6300 I have chosen. So go back to 6400. So 134 minus 88, it comes to 46, or I can slightly go up so that so this I can buy, and I can think of 6500 to sell. So 88 minus 52, so it comes to 36 point liability. And let me see what is the net Greek. I have to, this is one first option, it is ruled out because profitability is only 2850, liability is 4650. We are not going to take that one. We are going to take multiple bull spread with future sell, the next one. Multiple bull spread, this is a bull spread and this is the future we are selling, but delta must be 0. Delta must be 0. So let me see what is the net delta now. So net delta is 0.8745. 0.8745 negative. So what I can do here? So what I can do here? I can just give this thing as 2 lots. Suppose 2 lots here, and calculate and see my Greeks 0.74. So let me take some 4 lots. 4 lots, calculate net Greek analysis 0.49. So let me go for some 5 lots, 5 lots or 6 lots, 6 lots, calculate, and I will be just coming to negative 0.24. Negative 0.24. It is better if I can investigate on the Greek. So I'll scan the Greek. So how many times I will be doing this one? So I need the delta of 6400 call option, which is 4.4386. I need this one also. So 0.4386 minus 0.3794. So this is the Greeks. Go back to the Excel. So 6400 having the Greek as, I have used the Greek scanner, so which has given me all Greeks. 6400, 0.4386, 0.4386, and same way the 6500 is having 0.3211, 0.3211. So I am buying this one. So I am buying this one 6400, and I am selling 6500. So this Greek will become, this delta will become negative. So net by with one lot buying and one lot selling, I am just adding up a delta of 0.11, and future is, all of you will be knowing, future will be having a delta of 1. So I am selling a future, so it is 1. So I can say how many lots I can take so that it can become delta neutral. So 8.5 lots. So I am just going to the option strategy scanner, and I am going for 8 lots, 5 to 8.5. So take it 8 lots. So near 0 I can get it. Near 0 I can get it. So near 0 I can get it, and 8 lots, what is the liability I will have? So 88, theoretical first we will calculate, then we will go for the practical approach. So 88 and 52.3. So 88 minus 52.3. So this comes to 35 points. So 35 points into 8 into 50. So this is the amount 14,280 rupees. We kept it as a liability picture. We kept it as a liability picture. So 14,280 we kept it as a liability picture. So in the option, however, we are also selling a future. So 6,300 level we are selling a future. So it is a delta neutral. I am telling you to hold it to the so this is so it is 6,300 level. We are just selling it off. So by this process, 14,000 worth of money we put it in the risk in the market. How practically it will behave? So let us see. So tomorrow or within this 3 days period, we have a chances that it can goes to 6335 or 6256. This is the first level it will penetrate. In both the cases, we have a profitability of 1391. If it crosses this one, then it can make a target 6358, 6372, 6404. So our profitability is going on. Our profitability is going on increasing. So I have to calculate this one. So reset. I have to sell one lot. Here I have to call option 6,400 call option. I am buying 8 lots and I am selling a call option 6,500, sell that to 8 lots to make it delta neutral, 3 days holding period. I'm just calculating this one. So I'm seeing here once it goes to 6,540 or 494, that range within this 3 days period. So 3 days is Saturday is coming one day, today is one day. So I can say one more day I can increase. So if it is going in this range, so my profitability, both the cases, my delta neutral strategy doesn't have any losses, rather it has a small amount of profit and delta is at a near zero level. Not near zero, little bit negative it will be there. So little bit negative will be 0.0536, it is a little bit positive it is there. So by this process I have calculated this much is the price, but actually this is the targets as per the GAN level. Now let us see as per the trend, as per this trend volatility where it is going to. So this is the uptrends for this month. For this month we are expecting maximum 6596. For this month we are expecting downtrend maximum till 6009. For the coming week, because it is a weekly from this Friday to coming Friday, we are expecting maximum 6468 or minimum 6128. In 6128 level, 1322 will be your profit, and also 1336 rupees your profit. But here one thing I just wish to tell you, why this gives you a lesser profit estimation, this tool at this particular time, but your profit will be definitely higher than that, because it factors the current volatility. It factors the current volatility. It doesn't factors the future volatility what you are going to impact. So whenever the future volatility will fall, this option 6,500 option will have a greater decay, provided if it is going to this 6,400 level, Nifty is going to 6,400 level. This option of 6,500 will have a greater decay, whereas this may remain constant, all will have a little appreciation. So by this process, your profitability will be definitely higher than whatever we are projecting here, because this projection is being taken with confidence of today's IV and today's volatility. However, as per our analysis on this, says in future time to come, we are going to surrender the volatility. IV is going to fall. So this is also one of the strategy you can think of taking. Same kind of, since Nifty is in that range, you can think of forming any kind of such multiple bull spread with future short in any future also, stock future also. So multiple, this is a strategy I am recommending you for now. Multiple bull spread with future short, keeping delta near zero. This is a strategy you can take in any stock future. You can take in Bank Nifty, you can take in Nifty. You can take in Nifty because this trend is now having the same kind of view. We have a expectation of a uptrend with fall in the volatility. So you can utilize this strategy in any of these things. Or if you are little advanced trader, so if it is little advanced trader, you can think of forming a theta 0 or negative Vega strategy also. Theta 0 or negative Vega strategy also. Calculation. So if the daily volatility remains plus or minus 30% of the previous day's volatility, price must close above 45-degree resistance drawn from the previous day's lister as per the Gans method. Then it is a bull trend. In this also you can form a 5/2 call spread with upper strike put long. This is also a strategy you can think of forming at this particular situation. Bear trend, if the volatility remains plus 30%, means increasing previous day's daily volatility, and prices must close below 90-degree resistance drawn from the previous day's last traded price, then it is a bear trend for the coming day. Range bound, if the daily volatility remains in the 10% band, the previous day's volatility, and prices must close in the 30-degree resistance or support drawn from the previous day's LTP, then for at least for 2 sessions, then you can say it is a range bound trade. So these 3 things as per the Gans. So you must ask me what is this resistance, 45-degree resistance, 30-degree resistance. For that you can just go to our website smartfinancein.com. smartfinancein.com. So you can just go to our website smartfinancein.com. So under the video section, you will get, this is the video sections. We have specific GAN literatures available here. So GAN's 3 literatures available here. So if you can go through it, you can get to know how to calculate those levels. But take a note, this is the simplest way to find out bull trend, bear trend and range bound trend. In the range bound trend you must think of forming short straddles, short triangles, or you can form conversion, you can form covered call, covered put, anything you want, wherein you will be receiving the money. So you will be receiving the money. So those kind of strategies you can form in case of a range bound trend. In the bullish trend, bullish market, so net credit calendar spreads also you can form. Net credit calendar spread, short straddle, short strangle. So these are the strategies are given. Conversion, covered call, covered put. These are the strategies you can form. But in the bull trend and bear trend, you can form 5/2 call spread, 5/2 put spread. But have a look on the volatility also. how the volatility is going to behave, that is also very, very important. So from IV, you will take a clue that how the volatility is going to behave. Fine. So I'll just spend a couple of minutes for our product demonstration. Then after I will right away come to your session to attend your questions and all. So Smart Finance has 9 different products. As you will get all details about our product from our websites under the products link. So under this products link, all our products are listed. And this products has some academics, some software products. We have academics and software products. We have investor course, technical, Iliad, Fibonacci, GAN, futures and option, volatility. This is a ebook with a software. This is a pure software. The software what I have shown you, option strategy software, which has 22 option strategies program, which has a inbuilt strategy formation facility wherein you can form any strategy. You can see your net Greek. It has a Greek scanner to scan all the Greeks of all options. It has an advanced trend analyzer, so which can say that in weekly basis how much trend you, what are the prices you are going to get, on monthly basis what you are going to get, till 5-leg option strategy, including 6 future 6-leg option strategy you can form. You can form any kind of strategy, any kind of complex option strategy in that. So this is also a product which I have demonstrated. So prices as per the academics and basic softwares like these are the softwares having intraday option feature, positional option feature, commodity, all these things. This with courses, it has a different price tag. So here, if somebody is taking all the things, all courses and all basic softwares, it is 12,000. But that doesn't include your option strategy software. Option strategy software, we are having 10,500, and it has a yearly maintenance of 3,500. It is automated software. Any stock options, any index option strategy you can form. And this is for month of this December till if you are interested this thing, we have some specific discounts for this now. So till 10th of December we have a discount in this option strategy software for 500 rupees. So you can buy it at 10,000. So 500 here. So full package also we are running one discount, 11,500. So 500 rupees discount till 10th December. And we have the associates at Mumbai, at Gujarat. Gujarat, Manish is our associate. Mumbai, Mr. Paresh and Mrs. Namita is our associate. So their phone numbers are here. So any product related queries you can ask them, or you can call to our Chennai office at this number for product related queries. But if you are located at Mumbai or Gujarat, then better to contact them, so they will immediately deliver the product to you. So this is about the product. Now I will go back to your question and answer. Anybody has any query in understanding